Everyone, welcome back to another Tesla weekly video for today. It's been another hectic week with regards to Tesla. More layoffs, more noise. We've got a lot of numbers, one coming out of China, the other coming out of the European countries with regards to sales in April. So we've got some numbers to cover. Plus, I want to share my thoughts and ask you a couple of questions as well throughout this video. So make sure to leave your comments down in the comment section below. So first up, we've got a huge bump week over week with regards to the Tesla weekly insurance number. That number came in at 14,800, so a huge bump week over week, which of course doesn't really put us back on track compared to last year, but it puts us a little bit closer. Now with regards to Tesla sales in France for the month of April, that number came in at 2,128. The mix was 66% Model Y, 31% Model 3, and probably the rest is Model S or X. With regards to the Netherlands, that number came in at 1,462, 72% were Model Ys, 27% Model 3. As for Norway, we know Norway very popular, EVs are very popular there. Norway, the number came in at 873. You can also clearly see that March was a pretty weak quarter. April compared to last year is a bit lower. The mix here is 80% Model Y, 18% Model 3. Now, I've already heard and read some comments that were saying that, oh, Q2 is expected to be also an extremely weak quarter. Just look at the numbers, etc., etc. But that would contradict what management told us during the earnings call. Plus, I do still think that there's a lot of cars that were in transit in Q1 that will probably be delivered in Q2. So despite Q2 being actually a weak quarter, we might have some positive effects from Q1 flowing into Q2. Now, overall, of course, you want to see the overall picture become better and better. As we'll see in this video, the global market for EVs, for cars, is not in the best place. More on that later on. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now on the positive side, which is obviously always the energy side of the business, so there's a new contract of around $650 million in Australia, a project in Australia to build the largest battery energy storage system. So at least we have that side of the business that is still performing quite well. Of course, more on the Supercharger layoffs later in this video. Moving on to numbers from other automakers. Volkswagen profit drops 20% in the first quarter on lower sales. The company cited lower sales and higher cost as key factors. Mercedes earnings drop on model changeovers and EV slump. Car making margin below target due to high cost of upgrades. US seen as only region with solid momentum for sales demand. Earnings plummeted 34% in the first quarter, weighed down by model changes and sluggish demand for electric vehicle. I mean, we've been talking about that for quite a while. Yes, demand for EVs have dropped, demand for plug-in hybrids have gone up. Quite strange, but okay, I'm not the one buying the cars. And of course, some comments with regards to Tesla, them actually focusing now fully on AI, robotics, FSD, is them maybe admitting that, well, there is going to be quite a heavy EV slowdown, and so let's focus our business on something else right now. Could be. Then with regards to the Megapack factory in China, so apparently Tesla's Megapack factory in China is ready to start construction this month. According to Wuha, he said, construction started at Tesla Mega Factory in Shanghai in March 2024. Since then, very little has been built on the site. He explained why construction stopped after the initial sighting in March. In April this year, the Tesla Shanghai Megapack Factory site, which has not been quiet, finally entered the excavators and bulldozers, which was thought to be the official start of construction of the Megapack factory. But in a few days, in addition to shoveling the original concrete floor and the shred, there is no longer any sign of construction. On April 22nd, the Chinese media issued a news release saying that the Tesla Shanghai Megapack factory is scheduled to start construction in May. It seems that the preliminary preparations are just for the official start of construction in May. Okay, so I guess there is probably going to be a small delay with regards to the start of production and the ramp up of the Megapack factory in China. Then the big news of the week is again, layoffs. So Tesla axes entire 500-person Supercharger team. So the report by the information via Reuters also claims that every single person working for both Tenucci and Ho, Rebecca Tenucci, Senior Director of Tesla's Supercharger business, and Daniel Ho, boss of its new vehicles program, everyone under them would soon be cut, including an estimated 500 people working within the Supercharger division. Musk wrote in an email, hopefully these actions are making it clear that we need to be absolutely hardcore about headcount and cost reduction. While some on executive staff are taking this seriously, most are not yet doing so. Now, with regards to this topic, I do want to have a serious conversation in the comment section below. What do you think about this? Is this them basically clearly admitting here, yes, there is an EV slowdown. We need to maybe better distribute our manpower, our investments throughout the business. Right now, Supercharger team has been doing quite well, in my opinion. I mean, they've been growing the Supercharger network quite fast. Maybe they're not happy that the teams are bloated. Maybe they don't need that many. But in my opinion, if you want to convince people to switch from ICE or hybrids to EVs, then having the best of the best Supercharger network, the bigger the better, is a must, right? Because most of the negative comments or most of the skeptics are like, range anxiety, I don't have a charger at home. Where can I charge? I've seen pictures, I've seen videos. If I go to a charger, plenty of cars waiting there. I don't want to waste my time, etc., etc. So now having the number one player in that field say, look, we are going to slow that down. I mean, in my opinion, that's not a good view. Plus, plenty of partnerships, leasing, etc., are still going on, right? So now that you fire the whole team, who is going to be the point of contact between Tesla and the person that has paid or maybe wanted to build out superchargers near his location? What's going to happen there? In my opinion, it's a complete circus show. I don't see this as a positive thing. Again, I could be completely wrong, but if you want to convince people to switch to EVs, and this is not just for Tesla, right? Tesla suddenly partnered up with every other automaker, right, to switch to NACS. And now you're saying that you're going to slow down. This is a tweet by Elon Musk, by the way. Tesla still plans to grow the Supercharger network, just at a slower pace for newer locations and more focus on 100% uptime and expansion of existing locations. I mean, the uptime is already close to perfection, so I really don't get this move, especially outside of the United States, especially in Europe. There are not as many superchargers in Europe as there are in the United States. And even in the United States, there are some places where it's completely empty. Yes, I understand. They can see the data. They can see exactly where people go to charge, the most popular ones. So investing in those locations more than others could make sense. But overall, it's all about building that network to become it bigger and bigger, to make sure that skeptics do not have the excuse of saying, oh, there's no supercharger network next to me, not going to buy an EV, not going to switch there. In my opinion, cuts should have happened somewhere else. But of course, share your thoughts down in the comment section below. Then more recently, actually a couple of hours before filming this, we had a new Model Y that launched, one with 320 miles, long range rear-wheel drive, just under $45,000, plus you have the $7,500 federal tax credit that comes and reduces that price. And Elon here added an interesting comment. He said that the previous model, the 260-mile range Model Y, built over the past several months, actually have more range that can be unlocked for $1,500 to $2,000, gains 40 to 60 miles of range, depending on which battery cells you have, working through regulatory approvals to enable this. Can someone explain how this works? Because in my opinion, this basically means that you buy a car, you have dead weight that you carry with you each and every day, unless you pay extra for more range. This is quite strange. Plus also, what type of regulatory approval do you need to enable for this? I find it extremely interesting and maybe even funny as well that every week we have some changes here and there and there's literally no explanation, nobody to talk to. But okay, maybe that's something they definitely need to work on. Then moving on to something even more important, this is from their website, investorrelations.tesla.com/shareholders/vote. You can already start to vote. If you don't know how, message your broker and they will definitely tell you how. Then, why is it so important? I summed up here a couple of points that were mentioned on X, so I summarized them all. 1, CEO control. The more limits pushed, the more control needed due to opposition, right? If you don't have that much control. I mean, we've seen what happened with Apple and Steve Jobs. Why was he ousted of Apple? Because they basically didn't like the way he was operating. What happened when he left? Apple went to, well, to say it quite politely, crap. Which of course can be linked here with Elon's path. Ousted from PayPal, making a coup is a real concern. Elon's target, disrupting major power centers, making him a target. Elon's motivations require strong focus on Tesla, reflecting his values. And then capital allocation. Elon is one of the best in the world, directing funds to benefit society. And of course, we as investors, value creation. I mean, if you look at Tesla stock return in the last 10 years, pretty remarkable. Private investors in SpaceX are probably quite happy with their returns as well. We've spoken about this, I think, last week or so. To me, it's pretty clear. If Elon leaves Tesla, the majority of my shares will be sold. On the website, you can also find some quotes. So this is one from a top 10 stockholder. With regards to the 2018 compensation, we do not think it's fair to set out a new set of options subject to a fresh set of performance hurdles. The requirements of the 2018 package were extraordinarily ambitious, and they were delivered. It is not reasonable for investors to expect to reabsorb the cancelled options and consider all that value creation to have been delivered to us for no consideration. Therefore, if it is legally advisable, we suggest simply subjecting the original 2018 package to a new shareholder vote. And so, a couple of questions here. EV slowdown. Is there clearly an EV slowdown overall that Tesla has noticed, and that's why they are now heavily pivoting towards FSD robotics? Are they now extremely close to solving FSD, and that's why they're switching their focus to that? Comment down below. Then there is, of course, the vote, shareholder vote, Elon's focus. Is it with Tesla? Is it not with Tesla? What will happen if the vote does not go into our favor? I mean, it's probably one of the most important next couple of months in Tesla's recent history, I would say. And then more pain ahead. Is there going to be more pain ahead with EV slowdowns, with probably Elon staying at Tesla, not staying at Tesla, focused on Tesla, not focused on Tesla, more layoffs, less morale at the company? Because, I mean, when you see these types of layoffs, when you see these types of, let's say, reasoning behind that, or lack of information, lack of feedback behind all of that, I mean, I can understand that there is quite a hit on morale. And so looking at the stock right now, of course, we had that big day, right? When the stock went up, what was it, 15% or so? But since then, the stock has come back down. We did have a little rebound here at the 50-day moving average, $176. The 200-day one sits at $204, and the 20-day one at $171. Then looking at the weekly, of course, we had a big rebound here after the earnings report. RSI has some positive momentum there. And right now, like I said, we are above the 50-day moving average. Let's see what happens in the coming weeks if we can challenge that 200-day one. And maybe in the coming ones towards the second quarter of this year, maybe if there is, again, more positive comments in the earnings call, maybe they show us some positive numbers in the earnings report, it can go over that downtrend that has started already since 2021, October 2021. So overall, to conclude, quite another hectic week for Tesla shareholders. In my opinion, 2024 is going to be quite a hectic year, maybe not just for Tesla, but for most of the stock market, most of the countries around the world as well. Long-term shareholders for Tesla, if you want to have those long-term gains, if Tesla does reach its full potential, whenever that will be, of course, the gains will be immense. Short-term, yes, I do still think it's going to be quite turbulent. Communication is key. This is something that Tesla has lacked for a long time. Hopefully they fix that issue. Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.